What's up? This your boy E White. Happy Friday. All right, things are going well. Like I told you guys before, I keep the same system, keep it simple, play it. All right, so we're gonna go over some sentiment. All right, let's look over here. We got our US dollar, Japanese yen. We had some nice little, we found some support and we rallied out of here. And that's probably going to be based off of the depth talks of them raising the ceiling. So there was some rumors coming out about that, and so you saw that the U.S. dollar is really strong. But let's look at the sentiment. When you look at the sentiment right over here, we got the USD JPY. 67% were long, and 33% were short. All right, so this gives a contrary indicator of a strong bullishness, and we did find that coming out of here. And so, what do you know? 67% of what? All these bears, they got their stop losses sitting above here. We now have this liquidity grab. But what I told you before, typically whenever the majority is like this, that means they're early, and we will find a setup for it to eventually go short. But retail are typically wrong and at the start. They, for whatever reason, retail actually has a good sense of direction over the long haul. They are terrible short term and they're impatient. So, yes, the market is going to go up. Bitcoin is going to go, it doesn't matter what instrument, it's going to go up, right? And so, what do they do? They just come in, they load now, not really realizing that they're liquidity right now. And they're providing something for someone else that's much larger than you. And so, you want to be a lot more patient and you want to wait. Like, for instance, I mean, a lot of people bought Bitcoin at maybe 40,000, 30,000, 28,000, whatever. They just loaded up and then eventually dropped all the way down. They got into the 16s, 17 region. And a lot of those people sold. They bought high and they sold low. So there wasn't patient enough. And then they probably didn't have a scale in strategy, right? But this happens all the time. So you see it right here. We got 67% short, 33% long, and we see that this is liquidity. All is being grabbed right now. I am currently out of this trade, but you clearly see this one over here was a good setup um, that did hit based off our trading metrics. We only trade double tops and bottoms to the neckline. We do not go to targets. However, we do go to targets whenever we have the proper pullbacks and retests, and we see that we have some form of a continuation now. But that is not our primary target. Our primary targets are waist and neck. So this Euro Canadian dollar played out well. Also, you want to understand too, when you're thinking about the US dollar is strong. Typically, the Canadian dollar would be strong too with other pairs. So you see right here, the Euro CAD, the Canadian dollar is strong. So we get a push down. So this is a pretty good payout over here. We get down 39.40 pips. So it's not bad. We keep it moving. Uh, let's look at maybe Australian dollar, Canadian dollar. Let's see what it's doing. And you see that the Canadian dollar is considered on this chart to be the bearish red candles. It represents its strength. And we see we got this nice little drop. And over here we got a rally. So the US dollars on these pairs over here represent the left side, and over here as well too. So if the US dollar is pegged to the Canadian dollar, typically if the US dollar is strong, it's going to be stronger than Canadian dollar. But if you look at other pairs like this, the opposite is true. So that means you can take also a correlation strategy where you see, oh, hey, look, there's some good news came out with USD, even though the Canada is their own country, right? They got their own policies, they got their own economic data. But a lot of times, if something is strong that's going to affect all of the markets, such as the debt ceiling, maybe you got sometimes home manufacturing and other economic metrics, sometimes inadvertently the Canadian dollar will be risen because we're really considered what, North America versus basically South America. Then you got other countries, but the whole entire North America can benefit. Also, you do know that there's other exotic currencies. I think that's like with the Mexican peso. Um, you got Singapore, I believe they got there. It's a lot of currencies around. The spreads are higher, but there are a lot of opportunities over there as well too. If you can catch a correlation, you may see that, hey, whenever the US dollar is strong here, I noticed that maybe, I don't know, the Mexican peso is strong as well. A lot of people don't look at that stuff, but you may look at it. That's thinking contrarian, right? So yeah, um, I'm not gonna stay long in this video, but you see, let's do a couple more sentiment, and I'll be at your head. Also, this summer I do plan on doing another intensive um, workshop on trading, where we're gonna do some intensive. We're gonna be in a market live, so I will create a link for that for signups. Let's start in June. So be on the lookout for that. And you'll also be added in a group for additional support as well too. A lot of you guys are very smart, but you don't believe in yourselves. So we got to work on that. Australian US dollar. All right. So we already saw some of that over here. I think I changed it out. Let's pick this one on USD. Also, I have the paid version of uh, Trading View, so I can get these multiple panes. You want to go right up here, and you see I can go down to a single split like that. I got the four. I think we can even do one. Let's see what this will look like. Yeah, so I can get what? Five? Five charts for one. All right, look over here at the US dollar, Australian dollar. All right, we get this drop, but 78% wet long. And it even gives you like a signal, bearish. Now, let me tell you, do not come in here and think that, oh, well, it's bearish, let me just go short. No, that's not how it works. You want to look, that's why we look at market structure. We look at various things that's happening on the chart. We don't just blindly jump in. In hindsight, it looks like, yeah, you can do that. All right. Um, we look like we was rallying and get up here, but you got to look at market structure. And what do you notice? You notice that we came back here to structure. And also, I'm on the bottom left. I know on the screen on the top it make it look like I'm up here. I'm not up here. I'm down here to the bottom left. So yeah, yeah, see how price came back up, it came back into a supply zone, and then we had a drop. Now guess what? Now we're back into a demand zone. We could see some relief rallying, okay, or we could just continue seeing some lows. Now, once all this stuff comes out with the depth talk and some other analytics we're looking for, then we would know more. Um, I do feel like the US dollar is setting up, like I said, to hit some form of resistance points. And then we're going to see the equities market rally. We're going to see crypto markets rally, etc. And then as we head deeper into the summer, a lot of times some of the stocks and stuff start to cool off. A lot of people are on vacation. All right, so you got to factor that in as well too. All right. Let me see. But yeah, if you want this, I'm gonna put it in the video. This is another forex client sentiment that you can use. It's multiple sites that I do use. I use my FX book, and I use this as well. And then some people use the daily FX as well. So if you think you want to use that, you can. I'll ask you just hit the like button, subscribe, stay updated. I'll let you guys know when I will be doing those intensives, and I will be doing a few of them over the summer My job is to really get you guys to see the market as a contrarian, actually stick to a strategy, work it, perfect it over and over and over again, and stay true to the game. Manage your risk management. Keep it going. All right. So hit the like button, subscribe. This your boy E White. I am out.